Many thanks to Better Finance and the International Federation of Investors to giving me the opportunity to contribute to the conference. It is very unfortunate that I cannot be today in the beautiful city of Beirut and be personally attending this important conference, but I would like to share a few thoughts about the topic of investors, retail investors in capital markets, and making sure that they are well protected. Obviously, the topic of investor protection and their role in capital markets is a very global theme. Regulators across the world, securities regulators across the world are considering how to improve investor protection to make sure that they feel comfortable when participating in the capital markets. And it's very important that in organizations like IOSCO, but also that organizations like Better Finance and the World Federation of Investors, is that they have these global conferences where they can learn from each other and share experiences across jurisdictions. One of the experiences in our jurisdictions in the EU is that it's very important to try to increase the role of capital markets in the financial system. As you probably are aware, within the EU, the banks play a very important role, and we think we can make the financial system more resilient and more stable when the capital markets play a more important role in the financial system. But we also think that is to the benefit ultimately of households, that if households participate in capital markets, is that ultimately in the longer term they will get a better return on their savings and on their investments. And therefore it is important that households participate in the capital market to increase its role in the financial system. And key for that participation is that investors feel comfortable to participate in the capital market, is that they have sufficient information, that they get a good deal, is that the products that they buy, is that these are good products. And so that is the focus of European regulators, but obviously that is also the focus of regulators across the world. The main piece of legislation in the EU governing investor protection is MiFID, and in 2018 we implemented MiFID II, and MiFID II is really a big step forward compared to MiFID I. I think if we go back to the older days, securities regulators had the approach that transparency in principle should do the trick, and that if there would be sufficient transparency to retail investors, is that you would get to good outcomes for retail investors. But I think based on experience with mis-selling scandals, we have realized that we need to go further and that better protection is needed of retail investors. And that is clearly very much recognized in MiFID II, for example, with the so-called product governance rules. These rules require both manufacturers of financial products, but also distributors of financial products to better take into account what is the ultimate market for these products, what is the target market for these products. And so when either designing a product or when distributing a product, both manufacturers and distributors need to very explicitly take into account what the future market of these products will be, and to make sure that there is the right match between the product and the ultimate market. Where MiFID II also progresses is in the area of inducements or commissions. And so, as you are aware, distributors frequently get a commission or an inducement from the manufacturer when they sell certain products. But obviously that raises certain questions around the quality of the advice and whether these inducements or commissions may direct distributors in the wrong direction when they're giving advice. And so MiFID II has some strong requirements around, for example, is that inducements are only allowed when they really improve the quality of the service. And obviously there needs to be transparency vis-a-vis the client around receiving those inducements, and that they can take that into account as a client. The final element that I probably should mention around MiFID II is the requirements around full disclosure, maximum disclosure regarding the costs and charges that are involved in the selling of the product, in the distribution of the product, Obviously, it's very important, especially in the current low interest rate environment, is that the end investor is aware of the costs and charges. And I think in that context, it is also very interesting to mention that ESMA, but also Better Finance, is very active in this area. Recently, Better Finance and we, at the beginning of this year, we published a very extensive work and statistical detail on the costs and charges of the various products that are bought by retail investors. And we think that such kind of transparency will help retail investors to better select the ultimate product. One additional change as a result of MiFID II is that we received, both at European level and at national level, the so-called product intervention powers. These powers allow us, as it says, to intervene in products, for example, to ban a product or to put certain restrictions on the marketing and the sales of a product. And we have actually already used those products intervention powers in 2018. We saw a lot of consumer detriment in the area of binary options and CFDs, and so that was the reason for intervening in these products. We could see, for example, that in the case of CFDs is that in 80% of the cases is that retail investors were confronted with losses, and obviously that is an undesirable situation that you would like to put to an end. And so that was the reason for intervening in those products. We banned the sales of binary options, and we put restrictions on the sales and marketing of CFDs. For example, we put restrictions on the leverage that was allowed for these products, and we already measured the outcome of those decisions in the past year. And we could see, for example, that as a result of those product intervention powers is that the losses for retail investors were reduced, is that anyhow the number of retail investors participating in these markets were reducing, and ultimately we think that improved the outcome for the retail investor community. I understand that also regulators across the world are looking into these powers. I understand, for example, is that the Australian regulator, ASIC, is about to receive also these powers, and it's important that at conferences like these is that we share their experiences on such new instruments as regulators. So in that context, I would like to wish you good luck with the conference. I'm sure it will be very insightful to discuss these important topics with each other. And again, many thanks for giving me the opportunities to briefly address you.